Hey folks, Dan Frio here with your real estate news for this July 10th, 2026. What a wild week we had. We had Iran once again striking one of our ships, causing oil prices to jump back above $70 a barrel. That's going to be inflationary. But next week, we have all in 1 week, we have consumer inflation, producer inflation, and a jobs report. That's really going to show us where these things are going to go over through here. So if you're watching this channel, thank you so much. My name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer in all 50 states. My goal is to come in each day and explain to you guys exactly what is going to go on with these. And the most important thing is the whys behind it. So what we're looking at in today's news, we're going to look at this week's economic data. It was kind of a slow week, but we did have the Iranian situation. Then we're going to look at next week's data. We're going to get consumer inflation, producer inflation, and a jobs report all in 1 week. So let's break that down and figure out what the heck's that going to do for these things over through here? And most important, why? So without further ado, folks, me as a loan advisor, I come in each day, and what I start my day with, I start my day with a chart. So this is going to tell me exactly where mortgage rates are going for the day. All you have to understand if you're watching this is that number right up through there. If it's green, that's good news. That means mortgage rates are going to get better. The bigger the number, well, the bigger the adjustment. This week was kind of crazy. I'll get back to this at the end of this video after I explain to you guys what I'm advising my clients. But let's get over, and the Federal Reserve is going to meet in 2 weeks. They play a huge role in all this because everybody looks at them to figure out, where's interest rates going to go from here? So let's get over and see what the Federal Reserve is expected to do in the next 2-3 weeks when they come out in their meeting. But the first thing is, what do they look at? Okay, these are the things that they look at. And I know I do this every day, but it's really important. They look at this data through here. They look at inflation, they look at the jobs numbers, the GDP, and they also determine that rate over through there. That's the federal funds rate. Now, we've been told that the Federal Reserve might raise that rate once, twice, 3 times in the next year or two. But I don't know if you realize that federal funds rate doesn't have anything to do about your mortgage, because your mortgage rate is tied to the 10-year Treasury and other Treasury bills, and it's really determined off of this bond that we just focused in on. But what do those things really look at? Well, let's kind of take a deep dive into this. So what they look at is this stuff right through here. They look at inflation, and they look at the jobs report. Okay, so here's what's interesting. We're going to get all that information next week. But let's take a deep dive in what we got this week and see, okay, is there anything here we can really take away with? So Monday was some encouraging information. We got non-family manufacturing prices. That reading went from 71.3 to 67. So do you realize prices on the non-manufacturing side are coming down? This is good news for inflation. Okay, you come down to Wednesday, we got oil prices or inventory, and we're going to skip past that. But you look at the 10-year Treasury auction, this was pretty good. It sold last time. It took 4.53 yield to get rid of all the debt we have, and we have a record debt as our country. The rate only went to 4.58. So an increase of 0.05, nothing really there. Then you scroll over to Thursday, got a little bit of a reading on initial jobless claims and continued claims. That's still verifying there's low hire, low fire. So let's get over to next week. Now, this is when it really gets interesting. We're going to get consumer inflation, and we're going to get producer inflation. Let me break it down for you. Consumer inflation is represented by what's called the CPI. That's consumer inflation. Think of it that way. Then there's a thing called core. What core does is it strips out food and energy, the stuff we use every day. So here's what this looks like. They're saying year over year, the CPI inflation numbers was 4.2. They're really not giving us a beat on what they're thinking it's going to come in at. But join me Monday because we're going to show you what that's coming in at. But then it's also telling us the CPI month over month is going to go from 0.5 to minus 0.1. A huge drop. So if you see consumer inflation month over month plunge like this, I'll be high-fiving you. And the reason why they're saying this is, if you read into it, oil prices in May peaked at $119 a barrel. Then it dropped in June back down to, in some cases, under $70 a barrel. So this actually could come in at point. And that's why this up through here, this might be increasing a little bit because, again, when you have core, it strips out the food and energy. So if you take out the energy, the big drop, you might see a little bit of an uptick there. Okay, but the next day we're going to go to Wednesday, and you're going to see you'll have all these same numbers down through here. You're going to get the core month over month and all that stuff. But they're saying the producer inflation, look at this number, 1.1 previously. They're saying it's going to plunge to 0.2. Now they're saying consumer inflation is going to plunge, producer inflation is going to plunge. If we have initial jobless claims in a jobs report that comes in good, what do you think the Federal Reserve would do? Okay, so let's go back and paint this picture. If we have inflation coming down, we have a good jobs report, and they control this rate over through here, would you cut? Would you raise? Well, mainstream media is saying they're going to raise once, two, three times in the next year. And if you're a homeowner out there, you're probably thinking, okay, I missed my chance of refinancing. Or you might be building that house or looking to buy in the fall, thinking, okay, rates are just going to uptick from here. Well, before we go there, let me give you what I'm advising my clients. Because we know the Federal Reserve, they keep telling us they're going to raise rates and raise rates. But before you freak out, let's get over to this. If you're looking to buy a house right now and you got pre-approved from us and we get a contract in, I'm locking you in. Because I don't want to fear, okay, the Strait of Hormuz closes down once again, rates jump up, and I don't really want to put you through that. But here's what I want you to do. I want you to do two things if you're looking to maybe build or looking to buy maybe in the fall. Watch oil, because oil is going to tell you exactly where the markets are going, and subscribe to my channel. Because every day I'm going to come out and within 5, 6, 7 minutes, I'm going to tell you all the news you really need to know. And I'm going to actually show you the bond market that mortgage rates are tied to and what it's doing. So that's what I'm doing to our clients right now. If you need pre-approved, love to help you out. I'll give you my information in a second. But you might be saying, okay, what do I do if I'm a home owner right now? Did I miss it? Or I'm buried in debt? Does it make sense to use the equity in my house to refinance? Let's go over 2 refinance scenarios for you. And just go to my website. Okay, it's therateupdate.com. Do me a favor, plug your mortgage information up through there. It says Rate Watch 2.2 if you're a homeowner. What I'm going to do is I'm going to monitor rates for you and your mortgage payment. We don't sell the data. I'll monitor this personally. And when your rate hits wherever you want it to be to look at refinancing numbers, I'll call you, text you, and email you. But you can also put in there saying, Dan, if you can save me $200 a month, $300 a month, $500 a month, let me know. I'd be interested. We can do all that. But let's say you already got a loan estimate out there. So here, let me give you my slogan. My name's Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. The cool thing is I created this slogan. It's one application, one credit pool. We're going to shop your loan to 30, almost 40 different lenders. A lot of people are saying, okay, well, whatever. But here's how important it is. One, if you're looking to get the best rate out there, get pre-approved, you're probably going to go to bankrate.com, LendingTree, all these other companies. They're going to pull your credit, ruin your credit, get back with you with quotes you're not going to understand anyways. So if you already did that and you got a quote, upload it into that thing right up through there. So it's loan estimate review. What I'll do is I'll have a video out to you within probably hours going over what our fees are going to be and what our rate's going to be, because both those things are very important. If we can beat that other lender on both those, I'm hoping to win you as a client. Okay, but if you're out there and you're like, okay, Dan, I'm buried in debt, what do I do? We have a lot of calculators for you guys, but one of them is right through here, the debt relief tool. Plug in all the debts you have. AI is going to analyze it for you and put you in the best position you possibly can be in after this. And it's going to tell you, do you use the equity in your house or do you not? It's going to tell you exactly what they're going to do there. So let's get back to what the Federal Reserve's most likely going to do, because we keep hearing from the mainstream media they're going to keep rising rates. What would you do? What would you do? Let me know. But let's go down and see what the Fed's going to do. So they're telling us now there's a 75% chance the Fed's not going to do anything at the next meeting. Then from there, there's basically a 50% chance they're going to raise rates at the meeting after that. And then as soon as we get into 2027, they're going to look to raise rates there as well. My estimate is they're not going to do anything. They're not going to do anything at this meeting, anything at the other meetings. And the next move they're going to make, because I think inflation is going to continue to come down and the jobs report is low, higher, low, fire. I think the next thing they're going to do, if anything, would be to cut rates. Let me know what you think down below. And if I can be of any help to you, please let me know at the end of this video. But at the end of the video, I like to go back and see where the chart is. And today we're at 0. So I'm expecting the markets are just going to be completely flat until we have some resolution with Iran. At least, are we going to continue to go in there and bomb them and take over? Or is there going to become some kind of settlement? And even if there is a settlement, mortgage rates aren't really going to move that much until we actually see proof. And that can be 30 or 60 days from now. So that's our report for today. So hopefully you learned a little bit more about some things out there, especially what actually makes these things change each day. And the most important thing that you really have to monitor. What are those? Those are 2 things. Oil. Don't forget to subscribe over there. So that's it for today, folks. Thank you so much for watching. I hope you learned something, and join me next week, same time, same place, so I can give you what's going on with mortgage rates. And the most important thing is the whys behind it. Have a great weekend. God bless. See you then. Bye. Bye-bye.